Hi everyone, it's Fasal from Shariff CPA. I want to discuss good bookkeeping or record keeping today and the benefits of that. Oftentimes I see small business owners scrambling around during tax time, pulling their bank statements and credit card statements, trying to figure out how much money they made, how much expenses they incurred on rent and utilities and their cell phone and gas bill. And rather than hire a bookkeeper or an accountant to help them out with that, they tend to do it themselves. And I often ask them, well, it's kind of like mowing your own lawn. Would you rather do it yourself and spend that time? Or would you hire somebody to do it for you? And it all depends on, if it's worth your time to perform the service. For me personally, it's not. And I think that small business owners should do what they're good at, which is running their own business. So number one, I think that hiring somebody good to do your bookkeeping helps you during tax season. Number two, it helps manage all your payroll and keep it in one place. Number three, if you ever want to get a loan from a bank, then they will be requesting a set of financial statements. And so, and then number four, you're having your business expenses tracked on a monthly basis. And so, as a business owner, rather than spend all this time, getting all your, sales and expenses together, you want to be emphasizing on your business. And a good business owner wants to know the financial position of their business, usually on a daily basis. And so what good bookkeeping or record keeping does is you can go in and see what your accounts receivable aging is, meaning what your customers owe you within 0 to 30 days, 31 to 60 days, 61 to 90 days, and so on and so forth. You can see your accounts payable aging to see what you owe your vendors. And you can see on a month-to-month basis or a quarter-to-quarter basis how much you've spent on rent or utilities, on payroll, all your expenses. You can do different analysis rather than wait until the end of the year to get all your records together and then get all your bookkeeping done before your tax return. It just isn't worth it. You should focus on your business. And then essentially what bookkeeping does is we perform reconciliations of your bank statements, your credit card statements, if you're using PayPal or Venmo, and so on and so forth. And what a reconciliation does is you are using a third-party source, meaning like a bank statement or a credit card statement, and you are essentially comparing that against what you have in your general ledger. So for example, when you write a check, you would go into your software. For example, your accounting software is QuickBooks, and you would write a check in there for $100. Well, at the end of the month, there should be a $100 check that was paid through your bank. Now, mistakes happen, and let's say it was in there twice, a duplicate. Well, a bank reconciliation would catch any type of duplicate payments paid or received, because you want to make sure that your financials are accurate. You don't want to pay somebody too much, nor do you want to receive something that was too much either, or too little. You want to make sure that you are receiving the accurate amount of money for your business. So that's essentially what a reconciliation does. And so I would highly advise small business owners that don't emphasize sometimes don't emphasize on having accurate bookkeeping or accurate record keeping, to look into hiring either a in-house bookkeeper, or if you can't afford if your business can't afford an in-house bookkeeper, then to look into outsourcing that work to a CPA firm or a bookkeeping company to help you out with those services. Thanks so much for listening in, guys.